Warren Buffett's interpretation of financial reports. Number 29. Total current assets and current ratio. Total current assets is a number important in financial analysis. Current ratio is found by dividing current assets by current liabilities. The higher the number, the more liquid the business. Over 1 is good. Below 1, the business may have trouble paying short-term creditors. A business with a durable competitive advantage may often have a current ratio below 1. Why? Because their earning power is so strong they have the cash flow to cover their current liabilities. Plus higher dividends and stock repurchases. Both reduce the cash reserves to pull down the current ratio. This can render the current ratio almost useless when looking for a business with a durable competitive advantage. Another business tip from Learn Accounting Fast. Next, we continue exploring the balance sheet assets. Number 30. Property, plant and equipment. Not having them can be a good thing.